CNBC-TV18.
About 30 points higher. That's the first tick on the index. The Nifty is now up close to about 50-odd points. The Nifty at the day's high, 100 points higher there.
Firm day, and the market is, actually almost flying away, right? So the price action is not being mirrored exactly with respect to what we saw overnight, but this is still quite good. Good session, good close on the Nifty. Mid-caps doing well.
Yeah. Good evening. You're watching us here on Markets Today on CNBC-TV18. This is a show where we track about 6 hours of today's trading action in 5 headlines. I'm Mangalam Malu. And what a day this was. Yesterday there was consolidation, recovery from the lows, of flat close, and today there was build up on those gains. The Nifty closed above that 18,600 mark, led by the banks and also Reliance and the IT stocks. So let's talk about those 6 headlines then. Stock markets rebound led by banks. Sensex gains over 400 points. The Nifty gains over 100 points. IT stocks see short covering following recent fall, while PSU banks continue their gaining momentum. Tata Sons announces the first potential listing of a group company since TCS in 2004. Tata Motors will divest part stake in Tata Technologies through an initial public offering, and as a result of which, Tata Motors ended 1% higher. Oil marketing companies clock losses as supply concerns push crude prices higher. HPCL, BPCL and IOC, all of them ended lower. Colgate Palmolive India says it is open to inorganic opportunities in the personal care space as it looks to expand into this space as well. The stock, however, trades with minor losses. Dalmia Bharat slips close to about 3% on a likely profit booking day after it inks the deal to buy cement assets of JP Associates. Sterling and Vinsel Renewable Energy surges after Nuvama initiates coverage on the stock with a buy rating. Positive analyst commentary helps Polycab India hit all-time highs today. Let's tell you what we have lined up for you on the show today. In the market opinion, we have Mahesh Patil of Aditya Birla Sun Life AMC, Gary Schlossberg of Wells Fargo Investment Institute as well. And in big corporate voices, we do have Vineet Desai of LTIMindtree talk about the impact of one-time cost on margins. Let's talk about the day's trading action then. It was the mid-caps that moved as much as they did yesterday, about 1,400 stocks advancing, but it was the frontline indices that took your breath away. IT, Reliance, as well as the Nifty Bank, all of them did well for the markets on the day, where we saw some moves related to the expiry on financial Nifty as well. To get you more, we do have Prashant Nair.
0.5% kind of day for both the Nifty and the Bank Nifty. The market did dip early on, but never really looked back, and the Nifty was up 100 points by close. Public sector banks is where bulk of the action, we've been saying this day after day, and today was no different. Built on gains from the word go, and finally it was a 3.5% plus day, 12% for the PSU Bank Index in December alone. And the stock moves are on your screen, from Indian Bank, to Central Bank, UCO Bank. All sorts of PSU banks are now finally catching up. So intra sort of sector performance there, outcompeting each other, just completely wild moves. IT stabilized as a pack after 7 days of losses. And, you had the private banks which participated as well, although bulk of the attention and discussion and debate has been around PSU names. Real estate and FMCG slightly subdued by close today. Large cap gainers included IndusInd and Bajaj Finance. Non-financial names like Adani Ports, Mahindra and HCL Tech were some of the others. Market breadth did worsen towards close, but not very much. So broader gains coming through in names like Yes Bank, Tata Communications, HUDCO, NCC, recent listing of Uniparts and a bunch of others. But there were a lot of losses as well, led by volumes. So Laurus Laboratories, GHCL was down from the word go. Reddington, Lal Path Labs, Jaiprakash Associates, Macrotech, Loda Developers. We had the management with us earlier today, and a few others as well. If this momentum is to continue, the next level for the Nifty to take out is 18,665, which is of course the high that we saw on Friday. But before that, I think you get the inflation numbers, the consumer price inflation report for the month of November out of the US. And then tomorrow, US session, we get the Fed decision and Powell commentary, which I think will be pretty critical as well. So important next 2 days lined up from a global perspective as well. Back to you.
All right, Prashant, thanks a lot for that. In fact, let's also get in some market opinion, some expert opinion coming in from Mahesh Patil, CIO at Aditya Birla Sun Life.
We have been a bit cautious on the market here, though nothing wrong in terms of the fundamentals. I think the overall outlook on India looks fairly good. We've seen a decent amount of recovery over here. Demand has been fairly strong. And rural economy is also picking up, which is giving legs to the consumption, which was kind of weak last year. And there has been a steady pickup in the investment side also. So all in all, I think the outlook on India looks fairly strong and robust. The relative valuations where India is vis-a-vis the rest of the world, and especially the emerging markets. And to that extent, I think we've seen that recently there has been some amount of trade where money has moved into China, Korea, Taiwan, which were kind of beaten down and valuations were looking very attractive. So relatively, we've seen some flows there from the FI side. Overall, I think we're still very positive on a, say, next 2 to 3 year perspective. We see earnings growth in the region of around 13 to 15% CAGR over the next 3 years. And market should give reasonable returns from here.
All right, let's get some more market opinion. Gary Schlossberg, a global voice coming in from Wells Fargo. He expects the Indian economic growth to hold up well despite the slowdown in the US.
I think if there is a sell-off in the U.S. market and some of the other major markets in sympathy with that, the Indian market could get caught up to some extent. But I think the slowdown will be buffered not only by good news on inflation coming within the RBC's target range, but RBI's target range. But the fact that we expect to see Indian economic growth, even as it slows next year, hold up reasonably well compared to what's going on overseas. I still think India looks reasonably good over the next year compared to China. The good news for China is that they have lifted some of the COVID restrictions. The bad news is that the COVID infection rates continue to rise against a healthcare system.
To the second headline now, Tata Sons has announced the first potential listing of the group company since TCS in 2004. Tata Motors will divest part stake in Tata Technologies through an initial public offer. Tata Motors has gained 1% on the news. Sonia Shenoy joins in with more on Tata Technologies itself. Sonia.
The Tata Motors board has finally gone ahead and approved the divestment of Tata Technologies and will go ahead with an IPO. This is a long time coming. Remember, way back in 1989, Tata Tech was incorporated as a subsidiary of Tata Motors, and Tata Technologies is a product engineering and digital services firm, and Tata Motors holds about 72.5% stake in Tata Technologies. Now, this listing perhaps is also on the back of an increase in demand that we've seen for electric vehicles as well as for the aviation sector, and hence it's perhaps the best time for this listing to take place. As per Tata Motors annual report, the investment in Tata Technologies stood at 224 odd crores, and this is important because it's the first IPO from the Tata Group stable after 18 long years. The last one was way back in 2004 when TCS came out with their IPO. Now, the analyst feedback is that this is at best sentiment positive for Tata Motors. They value Tata Technologies at 20 times PE as per the FY21 earnings, and if they apply a 20% holding company discount, then this can lead to an upside of 31 rupees per share's fair value. That's a note coming in from MK. So that's perhaps the upside that you're seeing on the stock. At best, a sentiment positive, but of course, big deal for the Tata Group because after 18 years, there's an IPO coming out.
All right, we take that point, Sonia. Thanks a lot for that. Rima joins in with what the future looks like for Tata Tech now. Rima.
Thanks so much for that. So historically, the technology which is needed for the automotive businesses of Tata would come in from Tata Tech. The deemed captive accounts of Tata Technology were JLR as well as Tata Motors Limited, the India operations. But now increasingly, the dependence on these captive accounts has been coming down, and the company is getting, Tata Technology has been servicing a lot of the other clients. So the captive account contribution in in FY22 was 36%, which compares with 54% just 2 years ago in FY20. So this is a company which provides technology largely to the automotive, industrial heavy machinery and the aerospace business. A quick word about Tata Technologies financials. FY 2022 revenue growth was solid, 3,500 crore of a top line, bottom line at 437 crore. The FY 22 revenue growth at 46% was the strongest ever. In the first half of FY 23, consolidated revenues were nearly 1,900 crore rupees and a bottom line of 176 crore. The company has more than 9,300 employees as of 31st March 2020, headquartered in Pune, but they've got 5 offices which are located in Mumbai, Lucknow, Jamshedpur, Bangalore, and 1 even in Japan. Their service range, the services that they provide include IT consultancy, SAP implementation and maintenance, providing networking solution, CAD, CAM, engineering, and design consultancy. This would be the third listed IT company under the Tata Group. The biggest one, their crown jewel, is TCS. In FY22, TCS's revenues were close to 2 lakh crore rupees. But Tata Technologies' FY22 revenues at 3,500 crore will be more than that of Tata Elxsi, the other listed entity in the IT space from the Tata Group.
All right, let's move on to more IPO news. Auto retailer for premium and luxury brands Landmark Cars has hit the market for subscription. The IPO is priced anywhere between 481 to 506 rupees per share. The chairman Sanjay Thakur says that the company will continue to grow via inorganic means. Let's hear him out.
There has been a significant shift towards premium cars. There has been a 20% shift between 2017 and 2022. People are buying premium and luxury cars. Luxury is still 35 to 40,000 units in all for a country like India. 30% of what we are today is by way of M&A. Since the time we have started, 30% is what we are. So that's what we will continue to do. I think we will have better opportunities when we get listed. I think it will open more doors.
All right, and let's get you some corporate opinion now. LTIMindtree CFO Vineet Desai, who joined us for the first time since the company got listed as one merged entity, says that BFSI is actually seeing higher than usual furloughs. Despite that, all the IT stocks did well. Maybe some part of that was priced in. But for now, let's hear out what Vineet Desai had to say.
Both companies, both on quarter-on-quarter as well as on a year-on-year basis, we are still anticipating we will show a decent industry-leading growth. Again, in BFSI, it's typically the banking sector, whereby you see the impact coming in, but not across all the sectors of BFSI. And on the growth side, our travel vertical continues to remain still very, very strong.
Third headline today, the energy space continues to see volatility as supply concerns push crude prices higher. The supply crunch comes as the pipeline that connects oil fields in Canada with the refiners in US remains shut. Manisha Gupta joins in with these details. Manisha?
The crude oil prices continue to be very volatile. After 3% gains overnight, we have seen positive moves in Asian and the European markets today as well. And this is after 10% of decline in crude prices in the previous week. Well, 3 or 4 factors which are supportive. One is the Canada Keystone Pipeline, which delivers nearly 0.6 million barrels per day of crude to the refiners in US. The work is suspended there for a second straight week, and that has added premium to prices. So apart from supply disruptions, there also is the Chinese markets reopening, where the expectation is that the higher crude volume is being loaded in containers for China. That has been supportive. And then you have Russia reiterating yet again that they will stop producing or exporting crude to the countries which have participated in the price cap. Markets do believe that even as we are surplus crude as of now, perhaps 1.5 million barrels per day of an excess crude is what the world is working with right now. But if the Chinese demand comes back or Russia does not deliver because of the price cap, that is the reason you have seen prices being supported. There also is the dollar index, which is not budging from 105. That has been supportive. And with the kind of sell-off that we saw in the previous week, the crude was clearly oversold. So some buying seems to be coming in because of that as well. But the expectation is that before this year ends, a big move is ruled out. Crude prices perhaps will not run up too much higher from here on. And you could be looking at $70 to $80 per barrel of a range for the crude prices for the rest of this year.
All right, time now for a short break, but stay tuned. We'll be back in a jiffy with all the other headlines. Welcome back. You're still with us here on Markets Today. Let's talk about the other headlines or other stocks that made headlines today. The fourth headline today was Colgate-Palmolive. They'll foray into the personal care space soon, and in its analyst meet today, the company said they're also open to inorganic opportunities in the segment. The stock actually ended mildly lower, but remember, the street is looking at the long term, the roadmap that the company has spelled out. This is the first analyst meet since the takeover of the CEO, Prabha Narasimhan, the MD CEO, who spelled out the roadmap for growth. And what they've focused on, the first one, of course, is to increase the per capita consumption of toothpaste in India. If India is 1x, Philippines is 1.8x, and a comparable number for Brazil is 3.1 times. So if they were to increase the frequency of Indians brushing their teeth, maybe that would do well for their growth as well. And in India itself, the lowest hanging fruit is rural India, 0.6x average consumption as against urban India, which is 1.7 times. The other key focus area is toothpaste. In India, the average replacement for toothpaste, toothbrush cycles rather, in urban India is 6 months, and in rural India is 15 months, whereas the prescribed number for the same is 3 months. So if that was to happen, closer to that, that would increase their revenues from the toothbrush segment as well. So what was the 4-point strategy laid out by Prabha Narasimhan? The first one was to lead the toothpaste category growth, premiumization that they would do through science and innovation. The third one is category growth in toothbrush as well as devices, the electronic toothbrushes, etc. And finally, build personal care, move beyond just oral care that Colgate is in. What are the immediate actionables? The first one, they will launch the dentist first eB2B platform starting 2023. They'll enter the kids toothpaste category again, which would provide them with some more growth. Digitizing their sales force is the other actionable that they have, and all of that was then put into a 3-point key task ahead as well. The first one was to drive category volume growth. The second one is to be a viable business in personal care, for which they don't even mind looking at inorganic opportunities. So all this was the long-term roadmap for Colgate. The stock, of course, chose to decline in the near term, but perhaps move further if they were to walk this stock. Let's talk about the fifth headline today. Then Dalmia Bharat slipped in trade on largely on profit booking after it inked the deal to buy cement assets of JP Associates. Concerns on clearances and closure of the deal have weighed on the stock. Nigel stands by to tell us why the stock would have declined today. Nigel?
Well, that's right. Dalmia Group, they have gone ahead and got JP Group's cement assets, and it's been touted as a good deal. But yet there are some concerns, because will this deal get closed out in its entirety? That's the question mark. So there are some concerns, and let's state 6 top concerns that's plaguing the Dalmia shareholders. Point number 1, why didn't the big daddies bid for it? Whether it's UltraTech Cement or the Adani Group that's currently housed, that's ACC as well as Ambuja Cements, why didn't they bid aggressively for this asset if it was so good? So that's point number 1. Second factor is, some part of these assets, well, they have been shut. So there'll be some capex to resume operations, right? What is the quantum of the capex? Well, that will have to get added on to the enterprise value as of now of around 5,600 crores odd. So that's another question mark. Point number 3 is, out of the 6.7 million tons of clinker capacity that they're getting via this deal from JP Associates, 2.3 is the Dala Super Clinker plant in Uttar Pradesh. Now that's locked in arbitration with UltraTech Cement, and also I understand that all clearances have come through. Moving to point number 4, the Bilai Cement Limited, that's a JV between JP Group as well as SAIL. Now, will SAIL bargain hard for that 24% stake that they have in this particular unit? Remember, as of the last record, they have a clinker of close to around 1.1 million tons and a grinding capacity of around 2.2 million tons. So what's the bargaining power of SAIL in this deal? Point number 5 is, they're waiting clarity on the limestone availability. Is it enough for expansion? What about the land if they want to expand from here? And finally, the approvals from the lenders will be crucial as well. As of now, Dalmia and the JP Group, they are on board. But will the lenders be on board as well? Put all this together, Dalmia pulled back in trade today.
Take that point, Nigel. Thank you so much for that. But one stock that hit an all-time high today was Polycab India, gaining for the 4th straight day. This after analysts say that the wire and cables maker will actually benefit from easing inflationary pressures, as would a lot of the other commodity companies. But Polycab in specific, what do analysts like about this? Vahista joins in with more. Vahista.
Polycab India has had a good festive season, and the company has said that there's been good
poised for a V-shaped reversal as far as the last 2 years, which were a downturn, was concerned. What is it that they're saying? Globally, they're saying that the solar PV, order wins or capacity is poised to more than double as far as 2026 is concerned, and they believe that the company is sitting right at the center of it, and they believe they can really benefit from this particular order uptick that can be witnessed on the back of that. Also, what they're saying, global solar capacity growth in excess of 15% CAGR is what is expected to be witnessed, and given the fact that the company enjoys inherent advantage of lowest solar EPC cost, they believe that the domestic solar capacity also can increase significantly. One more trigger that they believe that Sterling & Wilson enjoys. Lastly, what they're saying, recently order wins have started coming in. So orders worth almost 2,200 crores from NTPC, and an MOU signed for Nigeria project is something that also bodes well as far as Sterling & Wilson is concerned.
Take that point, Vivek. Thank you so much for that. With that, we're out of time on this edition of Markets Today. Thank you so much for watching. Stay tuned.